Hey guys, I'm back with another daily video. It is Sunday, May 24th. It's about 10:42 a.m. and I'm making this video one day early because tomorrow is Memorial Day and the market is closed anyway, so it won't matter much. But I was just taking a look at the stocks on my watch list and some of the changes that I made to my watch list that I showed you in my prior video. And if you haven't seen that video, go back and check it out. It's how I decided which stocks to add to my watch list. But I took two stocks out of my watch list, and they were KO, which is Coca-Cola, and I also took out Walmart from my watch list as well. And not because I thought they were bad companies or I have anything against them. I took them out because I've been keeping an eye on them for a while now and taking a look at the premiums, and their premiums have always been very low, to the point where it would be too risky to even make a little bit of profit off their options. So I haven't ever made a trade on them, and I don't like a cluttered watch list. So I decided to take two of them off. I mean, if anything changes, I'll add them back on. But I mean, they're just such stable companies that their price doesn't fluctuate much, which is why there's not a lot of spread on their premiums or on their options. So I just took them off my watch list because I like to have a clean watch list. I don't want 50 stocks that I have to sift through every week. I just want a handful of go-to stocks that are going to be good to me and pick a couple options placed from there. And so what I was doing was I was back on FinViz. And again, if you check out my other video, I teach you how I use FinViz to screen for stocks that I might potentially like to trade. So I was looking at FinViz and I went to the screener section here and I clicked on all. So all will give you every single option that's in the descriptive tab, the fundamental tab, and the technical tab, so you can use these options to search for stocks. So the first thing we need to do is we need to look to make sure that these options or these stocks are optionable. So we're going to click right here which is option short. It has to be optionable because not every stock you can trade options on. And then the other thing we're going to do is we're going to look at the volume, right? Current volume. So let's just say I was playing around with this. Like I said, I started at 20, I went down to 10, to 5. I found this stock at the over 2 million section. And then the other thing, I was just playing around with these options and I was looking at all the different categories that I could choose from. So I found this one that says return on investment. So I said, that's interesting. Let me just go to the highest return on investment, over 50%, and see what comes up. So I came up with this list of 9 stocks, and just looking at this list, I know what HP is, right? I know what MasterCard is, but again, I have Visa on my list. And I mentioned that I have Visa over MasterCard just because I think Visa is a more popular company, but also because it's a cheaper stock. MasterCard's trading at almost $300 a share. And then I know what Starbucks is. And Yum Brands, I sort of know what that is, but again, not too much. So of these 9 stocks, those caught my eye. But actually the number 1 stock, because this is in alphabetical order, is Chewy.com. And if you don't know what Chewy.com is, they sell pet food. It's basically like Amazon, but for pet food only. And they sell online. So that was interesting because they have good volume. The price per share is fairly low at $42. So I took a look into Chewy. And as I said, I always go to my Yahoo charts to look at the 5-year chart. So I typed in the ticker for Chewy, which is CHWY. And I wanted to see what their stock was doing for the past 5 years. And if you realize, there is no 5-year chart. And that's because Chewy just went public in June of 2019. So it's only been trading for less than a year now. So that was interesting. But their chart looked okay to me, especially recently. So if you go to Robinhood and look at Chewy's chart for the past year, it dipped obviously because of the pandemic. But ever since then, it's been actually going up, and it's actually higher in value than when it first IPO'd. So that caught my eye. Just wanted to take a quicker look into the stock and see what their options are like, because I would want to start my wheel by selling a cash secured put. And actually, I was surprised that they have options that are 50 cents apart, which is rather rare because usually with new stocks or lower price stocks, they're usually $1 or $2 apart, which makes it hard to trade options on. But Chewy's are 50 cents apart, so you get way more options. So that was interesting to me. And then I took a look at what I may want to trade, let's say the 85% chance of profit, and I would get $30 in premium for a $39 strike price. So to calculate the return on risk for that, that would be $30 divided by a collateral of $3,900, and that would be almost a 0.8% return on risk at an 85% chance of profit, which is very good. That means that right now, Chewy has a high implied volatility, and that's why its premiums are so high. So I thought this was interesting, and I tried to figure out why this was, and I realized that's because Chewy has earnings in a couple weeks. So if we go back to the Yahoo Finance page for Chewy, we can see that Chewy's next earnings are on June 9th. So that's why the premiums are so high, because Chewy has earnings in about 2 weeks. So typically for all stocks, the premium value will go up right before earnings, and then usually after earnings happen, the premium will go back down. So what a lot of people do is they will trade options on stocks that have earnings coming up because they can get a lot more premium for the same strike prices. But what I would not recommend you do is do not hold options through earnings, meaning open up an options contract before earnings and then close it or make sure it expires before earnings, because earnings sessions are so unpredictable that the stock could swing either way and by a large amount. So it could go up by a large amount or it could go down by a large amount. So for example, if I was going to open up a cash secured put on Chewy, and if I held it or if I picked an expiration date that is after earnings, I might get assigned those shares because Chewy could drop so much so that it drops below my strike price. On the flip side, it could go up by so much that I'm super secure and that I will not get assigned shares. But it's a gamble there, and I don't like taking on unnecessary risk. So what I'm thinking about, or at least what's on my radar for this coming week, is to open up a weekly cash secured put on Chewy. And when I say open up, I mean sell a put, and have it expire this coming Friday. So I can take advantage of the high premiums on Chewy, but also make sure that my option expires before earnings. In fact, I can do this for 2 weeks before their next earnings sessions. So I actually added Chewy to my watch list temporarily. Let's see if it has earned a spot on my watch list permanently. It's a little bit more of a riskier play just because Chewy has only been publicly traded for less than a year. So I haven't really decided yet for myself if it's a good company or not. But right now, with their online model of selling pet food, it's obviously good for their business because we're all trapped in our homes right now. But the other thing that's in the back of my mind is, well, other stores like Walmart and Amazon, they also sell pet food. So how can Chewy compete with a big name place like Amazon? So that's something to just keep in the back of my mind, because my concern is if I do get assigned these Chewy shares, if the price drops for some reason, am I going to get stuck bag holding this? So if I do make a play on Chewy, it'll probably just be for one contract because I don't want to have to tie up a lot of my portfolio in shares in a stock that I may not want. But I'm still undecided about whether I want to make a play or not this week. If you remember from my other videos, my other possible plays that I'm looking at for this week are AMD, which has kind of been my go-to stock since I've started this YouTube channel, and it's been good to me so far. So it's currently trading at around $55, and I was looking at the $50 strike price. In a perfect world, I would like AMD to open, actually I would like all stocks to open in the red come Tuesday morning. That way I can sell a cash secured put on these stocks at a lower strike value and still collect a decent premium. So I would like to be in AMD at $50 or less. I think for the future, if I can get into AMD and lock in a share price or a cost basis of $50 or less, I may end up wanting to hold those shares and selling covered calls on it just to make premium, but then also let the stock appreciate. But that's kind of an iffy plan because I just don't know what the overall market is going to do right now, because if the entire market tanks, then all the stocks are typically going to go down as well. So that's why I've been kind of iffy on whether I want to hold any shares of any stock right now, because I'm a little bit bearish on the market, and I do think that we're due for another dip, but nobody knows when that will be. So that's why I just like to get in and out of shares as quickly as possible, because I don't want to be caught holding shares and then riding the wave down and having a lot of my portfolio tied up in stocks that I may have a hard time making more money on. So the other two plays I was looking at for this week were IWM, and this has been good to me for the past few weeks as well recently. So again, IWM closed, or is trading around 135 right now after hours, but again, hopefully that'll go down once the market opens Tuesday morning. But to get a decent premium on IWM and a decent return on risk, I'm looking at the $120, 127 strike price right now. So again, if IWM drops, I mean, if you can get dropped to like 130s, I could get in at the low 120s, I think, and still collect a decent premium. So we'll see what happens again Tuesday morning. And then the last play is Micron. And I haven't made a play on this stock yet, but it's, like I told you before, very similar to AMD. And it's a little bit cheaper. It's about $10 cheaper than AMD as well, which it makes it appealing. So for Micron, I was actually looking at the $42 strike price, which again gives me a roughly 85% chance of profit and a roughly 0.5% return on my risk. So those are my 4 potential plays that I'm looking at this week. Let me know what you think. Have you traded Chewy or Micron before? And if you have, put in the comments below what your experiences were, because I'd like to hear it. And do you use Chewy? Do you think Chewy is a good company to invest in long term? I'd love to hear your thoughts. As always, if you have any questions or comments, leave them below. If you have any suggestions for future videos, please let me know. And happy trading!